So let's get back to it. Chapter 2, we're going to talk about dependence and the rules for dependence. So on Tuesday, we left off talking about filing status, those 5 filing statuses, which, by the way, there is a question in your homework, only in chapter 1, that I have to manually grade. And so until I manually grade it, it's going to show up as, I don't know, you're not going to see your points on it. So just FYI, I had a couple of students in the online class that have emailed me about, hey, why didn't it update? That's why I still have to do that. So don't panic, it will be there. Okay, so we talked about filing status last week and the 5 filing statuses, and the fact that filing status is for every filing status except for that last one, the qualifying widow or widower with a dependent child. For all of the filing statuses, it's determined as of the last day of the year. So whatever your status was on December 31st, that's considered to be your status for the entire year. The exception, the qualifying widow or widower, remember, and that's with a dependent child. So this is somebody, they have to have a dependent child in order to get this filing status. So they are still considered to be married filing jointly in that first year when their spouse passes away. Even if their spouse passed away on January 1st, they would be considered for the whole year as married filing jointly. And then the 2 subsequent years, they would be able to file as a qualifying widow or widower with a dependent child, as long as they didn't get remarried during that time. After that point, if they still have a dependent child, they'd probably have head of household status. If they no longer have that child, they'll probably be considered single. The benefit of that qualifying widow or widower filing status is that standard deduction is the same as the standard deduction for married filing jointly. So, and if your filing is head of household, the standard deduction is halfway between married filing jointly and single. So it's a more advantageous filing status that qualifying widow or widower filing status is. But you can only have it for 2 years. You could have it again if you got remarried and then that spouse passed away. Then you just got really bad luck, or people maybe shouldn't be marrying you. Bad for their health. But for that one spouse, it's just for 2 years. Okay, so that said, let's move on to talking about dependence. Dependence, so I mean, it matters whether somebody is a dependent or not for purposes of certain credits and that head of household filing status as well. It used to matter in that we had these things called exemptions that you would get. It was an additional, so we talked about adjustments as a type of deduction. We talked about there's deductions as a type of deductions. There used to be a third category of deduction called exemptions. So deduction meaning it reduces your taxable income. And we would get a certain amount of exemption for each person on the tax return. So if you had 3 dependents, a married couple, 3 dependents, there'd be 5 individuals on that tax return. You would get a certain amount of money for each of those individuals. When they ended it, it was around $4,000. So you can figure that, like, it would have been 4,000 times 5, so $20,000 of an additional deduction on top of then the standard deduction. So dependents, it still matters whether you have dependents on your tax return for purposes of certain credits, for sure, and for purposes of the filing status, but that exemption amount, and I don't know if you remember the old W-4 forms that you'd fill out, it would talk about allowances, the number of allowances that you wanted to claim. That number of allowances was related to the exemptions. So we don't have exemptions anymore. What they did is they did away with that. That was back in 2017. I think 2018 was the first year that we didn't have exemptions. And instead what they did was they increased the standard deduction. They pretty much doubled what the standard deduction was, did away with the exemptions. So for a lot of people who don't really qualify for these credits, or who, you know, wouldn't, head of household status really wouldn't make a difference, whether somebody's a dependent or not might not matter to certain taxpayers, but it does matter to a lot of taxpayers. And we have to determine what a dependent is in order to determine whether they're then eligible for the Earned Income Credit or the American Opportunity Credit for their dependent, or whether they are eligible for head of household status, that sort of thing. So we're going to go through and talk about dependents. This is probably the biggest chunk of the day here, is talking about dependents. We have these, the IRS likes to call them tests. So we have these tests that we have to assess whether someone meets the test or doesn't meet the test. If they meet the test, then they qualify. If they don't meet the test, then they don't qualify. But there are several of these tests that we have to go through. There are two different types of qualifying dependents: a qualifying child or a qualifying relative. So you'll see that when we get a little bit further down into this section of the chapter. But for both qualifying child and qualifying relative, they have to meet these first three tests. So the first three tests that we have, and so these apply to everyone. Oh, that doesn't work. Already? It's so early in the semester. So these three tests apply to everyone. And again, this is to determine dependence. Pretty short here. Okay, so the first one, kind of silly, is called the dependent taxpayer test. And I'll talk about these in detail in just a bit. The second one is the joint return test. And the third one is the citizen or resident test. Like I said, these apply to everyone. So when you're trying to determine whether somebody is a dependent or not, these are the first three tests that you would go through to determine that. So the first one, the dependent taxpayer test, just simply means that the individual, the potential dependent, cannot be a dependent of somebody else. You can only be a dependent of one person. So for example, like if you have divorced parents and there's one child, if one of the individuals claims the child as a dependent, the other individual can't claim the child as a dependent. So you can only be a dependent on one return. So the first question you would ask is this person a dependent on some other return? So if the answer is no, they've passed the test, okay? So if they're not a dependent on anybody else's return, they've passed the test. Good, pass the first test. Second test is the joint return test. In this case, the dependent cannot file a joint return with somebody. Yes, it's possible for you to have a married child that is your dependent. But if that married child files a joint return with their spouse, then they cannot be claimed as a dependent. So, and there is an exception to this. Like, I don't know if I've said this. The answer to every tax question is it depends. So, and there are exceptions to every single rule. So don't get too frustrated. You're going to hear me talk about a lot of exceptions, and this is one that has an exception. So if they filed that joint return simply to get a refund, So they didn't have to file a return. There was no requirement that they file a return, but they have a refund due and they want to get that refund. And that's the only reason that they filed that return. Then that individual would still meet the joint return test. Even though they filed a joint return, if the only reason was to get a refund, they meet the test. So here's an example. We've got Lucia, daughter of Michael and Iris. Lucia, who's the child, the dependent, the potential dependent, married Lawrence Young in January 2024. They're both 18 years old. A little young, but hey. They're full-time students, and they have lived for the entire year with the Wilsons. The Wilsons paid for all of their living expenses, and you'll find out that these facts matter in the subsequent tests that we're going to talk about. So they paid for all the living expenses of both Lucia and Lawrence. Lucia and Lawrence both work part-time at the university. They each earned $1,000 during the year. So their employer withheld some income taxes from that $1,000. But if they each made $1,000, what's the married filing jointly standard deduction? $29,200. So their total income would be $2,000. Their standard deduction would be $29,200. They wouldn't owe any tax, right? Because their taxable income would be zero at that point. So they're not going to owe any tax, but they had a refund due because they had some taxes withheld. So the only reason they're filing this return is to get that money back. Okay. They file a joint return. Assume that in all respects other than the joint return test that they can claim Lucia and Lawrence as dependents. In this case, then they do qualify. They meet that joint return test because even though they filed a joint return, the only reason they did it was to get that refund back. Okay, so the tax liability on joint return would be zero. If they were separate returns, there would still be no liability. So they can claim them as dependents. Now, if it's the same information, but they each earned $20,000, so now their taxable income is $40,000, right? Or not their taxable income, I'm sorry. Their total income is $40,000. We subtract the $29,200. Now they do have taxable income, which means they are going to have a tax liability. They have a tax liability, then they have to file a tax return. So it's not that the only reason that they're filing is for a refund. Maybe they're due a refund, who knows, but that's not the reason they're filing. They're filing because they have to file. In this case, then they are not dependents of the parents, okay? Even if the parents essentially supported them. In this case, they're not dependents. All right, so that's the second test, the joint return test. You can't file a joint return unless, the dependent can't file a joint return. The taxpayer can file a joint return. But the dependent, the potential dependent, can't file a joint return unless it's only to get a refund, which means they had no tax liability, okay? Third test is the citizen or resident test. Citizen or resident, you have to be a U.S. citizen, resident, or national, or a resident of Canada or Mexico, so we're including all of North America here, or an adopted child of the taxpayer if the child is a member of the taxpayer's household all year and the taxpayer is a U.S. citizen or national. So that child has to have been a part of the household for the entire year. So everybody has to meet these tests. So like in our example up here with the kids in university, the young newlyweds, if let's just say that Lawrence wasn't a U.S. citizen, resident, or national, wasn't a resident of Canada or Mexico, and wasn't an adopted child, maybe he's here on a student visa from, I don't know, pick a country. Lawrence from Scotland. I don't know. Lawrence isn't a Scottish name, but anyway, then they wouldn't qualify because they wouldn't meet this test. Here. Okay, even though they met the joint return test, they didn't meet this. So you've got to meet all three of these tests. Everybody has to meet all three of these tests. Now, like I said, there are two categories beyond this. So we have qualifying child, and we have qualifying relative. Oops. Spell. All right. So once we get to this point, we can assume we've met all three. The dependent, the potential dependent, has met all three of these tests. Now we move on to some different tests. And what you would do is you'd first do the test for qualifying child. First, see if they're a qualifying child. Okay, so you go through these 1, 2, 3, and then you're going to look at the test for qualifying child. If the person, the potential dependent, does not meet one of the tests for qualifying child, then we go over to qualifying relative and see if they meet those tests. All right, so let's look at what these tests are. So for qualifying child, we have the relationship test, next, did I get there? Yeah, age test, we have the residency test, and remember, they've got to meet all of these tests. Fourth one is the support test. And the fifth one is, this one really isn't a test so much as it's an additional verification of you're not a dependent of somebody else, but we'll put it on here. So qualifying, oops. Sorry about the squeaky pen. Child of more than one. This one has to do with if you've got, usually it has to do with like divorced parents, who's going to claim the child for, who's going to claim the child as a dependent. All right. Relationship test. So, it is met if the dependent is one of these. Remember, we've got to meet all of these tests. Child or a descendant of the child. So, your grandchild, your great-grandchild, your great-great-grandchild could be one of those. So, descendant. Stepchild. Eligible foster child. Brother. Sister, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of them. So nieces and nephews would count as well. This is the relationship test. No cousins. Those don't count. What was that? I was going to say something else. I can't remember what it was. I've lost my train of thought there. A child does include an adopted child, includes a child placed for adoption in the taxpayer's household by an authorized adoption agency, even if the adoption is not yet finalized. But it has to be placed by an adoption agency. Okay, so child, descendant, stepchild, foster child, brother, sister, half-brother. So they also, if it's one of these, I don't know if they mentioned this here. Yeah, so the child has to be younger than the person claiming the dependency. So you can't claim your older brother. This kind of falls under the age test, but I wanted to mention that here. So you can't claim your older brother or your older sister the child has to be younger than you. That's the relationship test. If they don't pass the relationship test, we're not done. We could go to the qualifying relative tests. Okay? But it would mean that they're not a qualifying child. If they do not pass one of these tests, they do not pass any of these tests. Next one is the age test. By the end of the tax year, the child has to be under the age of 19, so 18 or below, as of December 31st. Under the age of 24 and a full-time student. What that does is it brings in college students, right? So you could still, even though you're over the age of 19, if you're still under the age of 24 and you're a full-time student, you can be considered, you would then meet the age test. So it's 19, under 19 or under 24. Now, what's a full-time student? This is someone who is in school full-time during any part of 5 calendar months during the year. That allows those students that graduated, they're still, they're 22, they graduated in May. That means that they were a full-time student January, February, March, April, and May. Even if it was just the first day of May, it was part of that calendar month. So that would qualify them to still be a dependent in that last year. Okay? Now, that can be a bit of an issue. My daughter graduated from college. Her graduation was in April. So she wasn't a full-time student during 5 calendar months. So when she graduated, we didn't get to claim her as a dependent. Or totally and permanently disabled, whatever age. Age doesn't matter then. So they could be an adult. If they're totally and permanently disabled, then, and that would be something that's determined by physician or social security disability or veterans or something like stuff like that.
With that, would, let's say something happened to me, my younger sister still wouldn't be able to claim me because I'm older than her? If I became fully disabled and she's my caregiver?
Yes, child must be younger than the person. Now, that doesn't mean that you wouldn't qualify under the next category of qualifying relative. Okay? So, that's the second part. Third test. The child must live with the taxpayer for more than half of the year to meet the requirement. Now, temporary absences count as living with the taxpayer. So my example of the college student, even if they were away at college, they're considered part of the household. So they're considered to be living at home. Also, education, vacation, illness, or military service counts. I believe incarceration also counts. I believe. So that would be, sometimes that's not a temporary absence. Sometimes that's a permanent absence. But anyway, so that's the residency test. Live with the taxpayer for more than half of the year. This is one of these areas, I gotta tell you, it's confusing. It's confusing to me. They have all these different rules for, is it more than half of the year? Is it the full year? Is it, lived with somebody or was a member of the household, like from which perspective? It can be very confusing. For this one, you have to have lived with the taxpayer for more than half of the year in order to meet this requirement. Now, that college student example, what would have to happen is that college student, once they graduated, would need to move back home. Then, at least until July 2nd or July 1st. Then it would be more than half of the year. And then they can move out if you wanted to claim them as a dependent. Okay, because otherwise, like if they just graduated and then they left, they would not be considered a resident. We wouldn't meet this test. Now they could, again, still be a qualifying relative. So we're gonna go through those tests here separately. All right, fourth test, the support test. Let's see. Oh, you can. A child cannot provide more than half of their own support. This is from the perspective of the potential dependent. Okay, so the child themselves cannot provide more than half of their own support. What is support? Includes food, shelter, clothing, medical and dental care, education, etc. Items such as medical insurance premiums, childcare, toys, gifts, and vacations have been found to be includable in support. Life insurance premiums have been excluded. So this is one of the, when we're talking about the different types of authority, I can tell just by reading this sentence that there have been court cases over this. That somebody took it to court to claim that something should be included as support for the support test. And the court has declared yes or no. So they would have been like the life insurance premiums. Somebody probably went to court and said, well, look, you need to include life insurance premiums as support. And then the IRS denied it, or vice versa, right? And the court has declared then that life insurance premiums have been excluded as support. A scholarship is not counted as support if it's received by and used in the support of a child. That's important, again, for our college students, right? So if they're receiving a scholarship that essentially, a full ride scholarship that helps, and then it helps to take care of room and board and all of that stuff, that's not gonna be included in the definition of support. That's good. That's good for purposes of dependency. You have to be a full-time student though. So you can't get a scholarship and be a part-time student. For items paid in cash, support is the amount paid. For non-cash items such as lodging, it's the fair market value of the item used to determine the support. So again, this is from the perspective of the potential dependent. Did they provide more than half of their own support? If they did, they're not a qualifying child. They don't meet that test, therefore they're not a qualifying child, even if they met all the other tests. Okay? Now this last one, special test for qualifying child of more than one taxpayer. So if the child meets the other 4 tests and could be a qualifying child for more than one taxpayer. So here we're talking about usually it's divorced parents trying to decide who is the qualifying taxpayer for purposes of the dependency. It's entirely possible that all 4 of these would apply to more than one person, to more than one taxpayer for that dependent. So it's kind of weird because like the residency test, child must live with the taxpayer for more than half of the year. Well, if you got divorced parents, how is that possible? Well, what if they got divorced during the year? So they got divorced in October. So the child still technically lived for more than half of the year with both of those parents, right? If the child, met the age test and was a child of both parents, met the residency test because the divorce happened later in the year, and so technically speaking, lived with the taxpayer, both taxpayers for more than half of the year, and the child did not provide more than half of their own support, it's entirely possible that they could be the qualifying child of more than one person. And then throw in there, maybe grandma or grandpa lives in the household as well. Well, then they would be a descendant. They'd still meet that test, right? So you can have a qualifying child of more than one person. You get through all these tests, and then you get to the last, and you realize, oh my gosh, I've got a couple of people who could qualify, a couple of taxpayers who could claim this dependent. How do we determine which one? All right, well, there is a hierarchy. So if only one of those people is the child's parent, then the parent gets the child, okay? If both are parents and they do not file a joint return together, so they're married filing separately, or they're maybe not married filing separately, they're both single. The parent with whom the child lived for the longer period of time during the year, that could still be equal, right? Let's say they got divorced in October the child lived with them, with both of them, till August 1st, and then moved out, well, the child lived equally with both of those parents, right? So, but if the child lived with one of the parents for longer, then it's going to be the parent who the child lived with for longer. Let's just say that was equal. We don't have a distinction there. Two of the persons are the parents. They do not file a joint return together, and the child lived with each parent the same amount of time during the year. So that's our scenario where they got divorced in October, child moved out October 1st. The child lived with them the same amount of year. Then the parent with the highest adjusted gross income is the taxpayer that gets the child. There's that term, AGI. This is one of those areas where it's necessary. So the parent with the highest AGI gets to claim the child. If none of the persons are the child's parents, then it just automatically defaults to whoever has the highest AGI. That is essentially the least tax, the most tax disadvantageous, or the least tax advantageous scenario is the person with the highest AGI. Now that we don't have exemptions, because it's related to credits, and those credits phase out at higher levels. So the person with a higher AGI may not even be eligible for some of the credits that the child would provide to them, right? If their AGI is high enough. Okay, so that's qualifying child. Let's say we go through all of that and doesn't meet the relationship test. It is our cousin, not our child. Doesn't meet the relationship test, so it's not a qualifying child. Oh, so child of divorced or separated parent. Now, I guess what I do want to add here for a minute. So the parents, the divorced parents, can make an agreement about who gets the child. So if one parent should be entitled to getting the child based on all the criteria, that parent can give up the dependency exemption or the dependency of the child to the other parent. It has to be in writing. There's a special form that has to accompany the tax return. It's a form, 8332. And what it does is it then releases that claim to the other parent. So there can be an agreement between the parents if they're divorced. And that happens a lot, like, you know, in divorce decrees and child support decrees and all that, then they'll make an agreement oftentimes. So that decree or that agreement can go against this. All right, so we've done that, and we don't qualify. Our potential dependent does not qualify as a qualifying child. Okay, well, all is not lost. Let's see if they qualify as a qualifying relative, because this is another way that they could be a dependent. So the first one, this is easy, not a qualifying child. Well, duh. We wouldn't be over here doing these tests if they were a qualifying child. We would have stopped. We're not going to continue on, do work that we don't need to do, but they have to put it up there. So, not a qualifying child. Number 2, relationship or member of the household test. So we still have a relationship test, but this is a different relationship test. You see we've added or member of the household. All right. The third one is the gross income test. You notice in here, there's nothing about the income of the child. The child can have any income. That does not matter for the qualifying child requirements. But over here for a qualifying relative, it does matter. I guess I should put test. And then the fourth one, support test. So first one, super easy, not a qualifying child. Like I said, duh, we wouldn't be here doing these tests for qualifying relative if they were a qualifying child. Because we're gonna start with the qualifying child tests, and we're only gonna move on to qualifying relative if they're not a qualifying child. Second one, relationship or member of the household test. Notice this is a much more expansive list. So, person must either be a member of the household for the entire year or related in one of these ways. So notice it doesn't have to be somebody that you're related to. It could be just somebody that lives with you, right? But if they are related to you, they could be a child or descendant of a child, same as the relationship test over here. Stepchild, eligible foster child, brother, sister, half brother, yada yada. Stepbrother or stepsister. Father or mother. Okay, so now we're not just doing descendants, we're going up. So your father or your mother. So there isn't the requirement, the age requirement here. It can be somebody that's older than you. That's only, have to be younger is only for the qualifying child test. Father or mother, brother or sister of parents. So now your aunts or uncles could be a qualifying relative. Son-in-law, daughter-in-law, father-in-law, mother-in-law, brother-in-law, or sister-in-law. Much more expansive. So if someone is related to the taxpayer, if they meet one of these relationships, they do not have to be part of the household. They don't have to live in the household. If they don't meet that one of those relationship tests though, they have to be part of the household for 100% of the year. Not 50%, but 100% of the year. They have to have lived with you the whole year. So this makes it possible for you to claim your father or mother who you support. We'll get to the support test and the income test, because this would exclude a lot of situations. But like your father or your mother, if you're supporting them and their income is low enough, but they live in their own house, you know, they paid it off. They've lived there for 50 years. They're still living there, you're supporting them. It makes it possible for you to claim them as a dependent. Now, you have to meet these other tests, the gross income test and the support test as well. Like it says here, it may be difficult to meet the support test if the individual does not live in the household. Next test is the gross income test. The dependent must not have gross income equal to or greater than $5,050. This changes every year. This is the amount that exemption would have been, had it been allowed to continue. Okay, so this is what that is based on. So they cannot have gross income equal to or greater than $5,050. But gross income does not include tax-exempt interest, the non-taxable portion of Social Security benefits. We're going to get into Social Security benefits and their taxability in Chapter 3. Or the non-taxable portion of a scholarship or fellowship. Yeah.
So would that include anything that's non-taxable?
Yeah, so like disability benefits, like Social Security disability benefits.
Or VA
disability benefits, yep. That happens every year. Okay, so you don't have to include those items, which makes it easier to meet the gross income test for mom or dad if they're just living on Social Security. If that's all they have, none of their Social Security benefits are going to be taxable, especially now. That was another new provision that was added to the new tax bill, is like the first, is it $6,000? I don't know off the top of my head. I think it's $6,000 of Social Security benefits are not going to be taxable, but for a lot of people, most of their Social Security benefits aren't taxable anyway, and you'll see that in when we go through Chapter 3, and we go through how to calculate the taxable portion of Social Security benefits. But a lot of older people, especially if that's all they're living on, they're not gonna have the 5,050, right? This also provides some tax planning, because maybe you wanna make sure that mom or dad or grandma or grandpa, if you want them to be your dependent, because you're helping to support them, make sure they've got maybe they've got some interest income that's coming in. Maybe you wanna move that to a tax exempt type of investment out of, just regular bank into something that's tax exempt, right? So, gross income, 5,050, but it doesn't include these items. Last test is the support test. Now, remember, so I said this is can get confusing, this support test thing. The taxpayer, over here, the support test was from the perspective of the dependent, that they can't provide more than half of their own support. Over here, the support test is different. The taxpayer has to provide more than 50% of the dependent's support. So you have to pay more than 50% for their needs, right? So it's from a different perspective here. This is a different support test than this support test. And they do that just to make you angry. just to get you more confused. Not really. It just sort of works out that way. So the taxpayer has to determine how much was paid for the support of the dependent, regardless of who paid that support, and then determine whether the taxpayer provided over half of that support. Because it's entirely possible that multiple people are providing the support, right? Maybe you've got a couple of siblings that are helping out. But in order to claim, so if you have might meet all these other tests, and 3 siblings are helping to support mom in her house, but if nobody is providing more than half of the support, if they're splitting it all equally, then nobody is going to meet this support test. So the taxpayer has to provide more than half. So in that case, mom wouldn't be anybody's dependent. She'd just be on her own. If several dependents receive the benefits of an item of support, you allocate the cost of the item on a pro rata basis, unless you can show that some other allocation is appropriate. So, if it's mom and dad, sort of thing. I'm trying to think of a scenario. Maybe they have one here. Oh, we'll look and see about this. So, if several, okay, I already read that. So examples include wages from a part-time job or social security benefit. Okay, so money received and spent by a dependent counts as support. Wages from a part-time job or social security benefits paid to a dependent. So do not confuse the issue of what expenditures qualify for support with the issue of who paid for the expenditures. They're different but related concepts. So there are 2 exceptions. Like I said, those exceptions. The first is when several persons provide for more than half of the support for someone, but no one meets the 50% threshold. If each person in the group would be able to claim the individual as a dependent and no person in the group furnished more than half of the individual support, one of the persons in the group who provided more than 10% of the support can claim the dependent with the agreement of the other persons in the group. So you've got to have agreement amongst them. So that example that I gave you before of it, it was like 33. Somebody may be able to claim mom, but everybody has to agree, and they have to, each person who's over 10% has to agree on that. And there's a special form that has to be filed. This is called a multiple support agreement. So here's an example. Martha, Monique, Terry, Robert, and Gloria provided all the support for George in the following percentages. So Martha provided 30%, Monique 5%, and Martha's a friend, Monique's a neighbor, Terry's a son, 40%, Robert's a son, 10%, Gloria's a daughter, 15%. And by the way, it has to be over 10% of the support. So you need to determine the members of the group who could claim George as a dependent, minus the support test. All right, so George's children, so Terry, Robert, and Gloria, who are George's children, Martha and Monique cannot claim George because he does not meet the relationship test. George did not live with them for 100% of the year. Remember, you gotta be related, or they have to be a member of your household for the whole year. Wasn't a member of Martha's household, wasn't a member of Monique's household. Okay, cool. So it's Terry, Robert, or Gloria. So as long as the remaining ones provided more than 50% of the support, the remaining ones being the sons and the daughter, and they provided 65% of the support. If there is a multiple support agreement, it's either going to be Terry or Gloria, depending upon what their agreement is. Robert doesn't qualify because it's not more than 10% of the support. Robert probably needs to chip in another few bucks to get his percentage up. But because it's not more than 10%, his doesn't count. So it's going to be an agreement between these two, Terry and Gloria, as to who gets to claim George as their dependent. Provided George does qualify for 1, does qualify for 2, provided George meets the gross income test as well. Although, I would assume if these people are all providing that percentage of his support, George isn't providing any of his own support, so he would probably meet that gross income test. So here, let's assume George had a part-time job that provided 25% of his own support. Now he's got some income. The other 5 people provided the remaining 75%. So which person would be entitled to claim George? In this case, it says no one would be entitled to claim George because only Terry, Robert, and Gloria would have been entitled to claim George as a dependent absent the support test. What that does, the 25% pushes their total below 50%. The 3 of them below. So now they're not providing 65% of his support. They're providing 48.75% of his support. So nobody would get to claim George. Right? So we want to make sure George doesn't go out and get a job. Right? No Walmart greeter. So that was one of the exceptions. So the second exception to the 50% support is the case of a child of divorced or separated parents. If the child is not the qualifying child, is that what it says? Is not a qualifying child, they can be treated as a qualifying relative of the non-custodial parent if these items are true. So a child has been in the custody of either or both for more than half of the year, either or both parents provided more than half of the support, parents are divorced or separated under a separation agreement, or living apart at all times during the last 6 months of the year. Let's see. Non-custodial parent can claim the child is dependent. Oh, again, so this is the written agreement that the 2 parents have to have. Okay. That's dependence. So again, everybody has to meet all 3 of these tests. Then we're going to do this. We're going to go here first. Should do this. And then here. So this is the order of the tests. Okay, so figure out if they're a qualifying child first. If they're not, then we'll go over and figure out if they're a qualifying relative. Questions? I know it seems clear, right now. Well, maybe not the 50% part. That's the part that always trips me up. 50% for who? 50% for what? Nope. All right.